Okay, folks, welcome to another Sunday Night Futures Live. So happy 50th anniversary to the end of the Bretton Woods Agreement. President Nixon, on this day, 1971, took the United States off of the gold reserve. One of the most destructive decisions ever made to the United States occurred 50 years ago today. A brief comment with regard to Afghanistan and yet again the seemingly the old saying. Let's go to that. What's the very definition of insanity? Is doing the same thing over and over again and expecting a different outcome. So yet again, as we did in Vietnam, we're doing it now yet again. We are bailing out. We are having helicopters land on top of the U.S. Embassy. And to those veterans, it's the only reason why I'm bringing this up, those veterans out there, you succeeded. Our leadership failed. So my hat's off to you. All right, let's get to the futures action. First, let's say hello to everybody. McCarter, hello. Abel, message retracted. He reposted it. Hey, Bob, can you do a technical analysis on the chart of Nari? If we have time, no doubt. Bob's been posting a lot more on Twitter. Keep him coming, Bob. Always bullish on contrarian. Thanks, McCarter. Larry, how long before the Taliban take over Central Park? You know what? It looks like they're already in L.A., Seattle, and Portland. So, actually, you know what? That's a discredit to the Taliban. Randy, hey, good evening to you, pal. All right, let's get to it. So, let's begin with what we're going to talk about tonight. Tonight, we're going to talk about our watch stocks. We're going to set up our alerts for EPI. That's the Wisdom Tree India ETF. Wheat. That is the Tetrium fund that puts you long of wheat. T, ticker symbol T, AT&T. The SMH, great weekly chart, really great weekly chart. And UBOT, that is the Direxion artificial technology, artificial intelligence, and what was the other thing on it? I'm going to remember it. Robotics ETF. So we're going to go over those charts. We're going to set up our alerts. And we're going to talk about economic data, how expensive the market is going into the new trading week. We're going to talk about that flash crash last week on gold. We have an answer to what happened. I'm going to share that with you. So stick around because I do have the commitment of Traders Report and we know exactly what happened. Okay, so let's go to the futures action. We're going to begin with the S&P futures and we are down slightly. Marginally, fractionally. This is a 4-hour chart. I will point this out, that we have a new daily low. Actually, I'm sorry, a new 4-hour low. We do not have a new daily low. Set up an alert. Okay. So we're vacillating here. New 4-hour bar lower. I'm just worried net long. I would be worried about the break of trend down here. Right now, still looks good. Who else do we have? Well, hello, Will. Jody. Jody's on time tonight. Tal in. Welcome. All right. It looks like we're about to go positive here. Let's go to the Russell 2000. of which we are short. The Russell had a very bad week last week. On Friday, that last 4-hour push lower broke support. And we do have already a new weekly low on the Russell 2000. Let's see if we break to new lower lows here. Let's go to the Nasdaq. Nasdaq's flashing an inside bar, 4-hour time frame. No new high, no new low. Down slightly. Let's take a look at the US dollar, which I had up here and it's gone. Woo! Whoa! Oh, this is not updated. It can't be updated. I thought we were down over a half percentage point. We're not. 92.49. The last tick is accurate. The percentage loss is not accurate. So far this session, not a good session. We have broken support. Okay, so with this in mind now we're ready to take a look at commodities. We're going to begin with gold. Gold is up. The first chart we've gone over so far, which has been up, gold, marginally. A really great week last week, despite that sell-off last Sunday and into Monday. What a rebound. Bullish key reversal bar on the week last week. Copper. Copper's struggling here a bit. Down below support. Some bids coming in. Home heating oil. Weak, which is good. I got to order some. Natural gas. Really took it on the chin. We kind of knew this was coming, though. Got extended. Natural gas. Yeah, Will, thank you for a reminder. Smash the like button if you could, please. Thank you. Nat gas is probably going lower here. Let's take a look at light sweet crude. Light sweet crude going lower. Trying to fight back. But it's down nearly a half percentage point. Rough week last week for crude. Palladium, down a third. Platinum, flat. Let's take a look at some agriculture names. Wheat, coming in. Strong week last week. We knew this had to take a rest. It's going to take that rest now. You know, if you take a look at these charts, not so much on a 4-hour time frame, you take a look at them on a weekly time frame, this is a monster move here. Let's stick with the weekly view for a moment. Corn. Corn consolidating. Looks like it's getting ready to rip. We are up. Yeah, this is going to go. We're in a very tight triangle formation. I think corn this week probably breaks out. We did wheat, soybeans, checking with that. Soybeans bouncing back here a little bit. Down on the session, but looks like they're up. I don't know what's going on there. Looks like it should be reading up. What else do we have? Bonds. I skipped over silver, not intentionally. Bond yields are up slightly. Where's my silver? Come on. Silver, there we go. Silver, down slightly. But it looks like it's consolidating. Silver looking good. Down slightly, but looking good. All right, so those are the opening futures. Mid caps are up slightly. Circle back to the S&Ps. Not much is changing. Okay, so if we have time, we'll come back. We'll see how everything settles down here. Not much in terms of volume, but if we have time, we'll come back. We'll see how we settle out the session. Let's go to economic data. Economic data last week was not good. Not good. Productivity, horrible. Unit labor costs rose. Inflationary. CPI. At the core, came in worse than expected. PPI, a lot worse than expected. Inflation at the producer level. We're going to go to a chart of German wholesale inflation in a moment. Nightmarish proportions. Inflation is just running rampant. Coming up this week, Empire Manufacturing Survey. Tuesday, retail sales. Industrial production. Business inventories. Watch that. If businesses are building inventories, that means nobody's buying. That means they're going to have to cut prices to get rid of this stuff. Wednesday, building permits. Forward-looking indicator on housing. Housing starts. Did those builders from 1 month, 2 months, 3 months ago who got their building permits, are they breaking ground? 2 p.m. on Wednesday, FOMC minutes from last month. That's always a market mover. Thursday, initial jobless claims, as we get every week. And the Philly Fed Manufacturing Index, leading economic indicators. This is what the Fed looks at. So it's going to be a busy week. So buckle up. Earnings. Earnings season pretty much is dying down now. There's only a few reports that I'm interested in. You know, we do have Walmart, Home Depot coming out. I'm really interested in trading the earnings play on Nvidia. We'll be looking to play options, a short strangle strategy, which has been working for us very, very well this earnings season and last earnings season. We'll continue that. So I'm loving Nvidia. Members expect some commentary on our analysis of probabilities and the risk reward for Nvidia short put strategy. In terms of swing trades that we're looking to put on for the coming week, we're going to go to that in a little while. Stick around. We'll be using our friends over at TrendSpider. And while I'm on that topic, folks, don't settle for ordinary trading software. These are our sponsors over at TrendSpider. Use automated technical analysis. Automate your grunt work, speed up your technical analysis, and improve your accuracy. How do you do that? Well, you improve your accuracy by using the scanners, 1. 2, you use the trade alerts, a rules-based approach. If this, then that. You're going to see me use it quite extensively tonight. And you use the automated support and resistance levels. Anybody, this is good for anybody. You may be saying, I don't need that stuff. I've been doing this for 20 years. I've been doing it for longer than that. And I still get value out of using the automated trend lines because sometimes I miss things. And it's also lets me know that I haven't lost my edge. For those that are new and not confident yet with technical analysis, then you'll want the automated trend lines. Hone your craft. Draw the manual trend lines first for practice and then have them validated by using the automated trend lines. So They have a demo tour. Use the link below, 35% discount code, 7-day free trial offer. There's your demo tour. Check it out. Lots of good stuff there. Again, 35% discount code. Use that code below. And let's move on with the show. Let's get rid of that. All right. We did earnings. We have the new trading week. It looks as though the Schiller PE ratio is kind of like stuck at 38.8, but second highest level since the dot-com crisis. The Buffett indicator, we remain strongly overvalued. Apparently, we have broken the Buffett indicator. We have been stuck at a 2.9 standard deviation move relative to the historical moving average for weeks now. But this is one expensive market, folks. Joseph, good evening. Germany, I don't know why they say Germany. Should we just German wholesale prices year over year? 11.3%. Whoa. Think about it. And they're a major, major exporter. One of the top 5 in the world. They will be exporting inflation. National rents here, United States, up 8.4%. And people aren't even paying their well, not everybody. Many people aren't paying their rents. This is what landlords need to do now. They need to raise rents, A, to keep up with the cost of living, and B, to subsidize those who aren't paying their rent. So inflation all over the place. This is going to be an interesting one. This chart here is investor sentiment in black. So we have a lot of bullishness in the market. Here's consumer confidence. Cratering. And to that end, I built a chart. We'll skip over the article. I built a chart with the S&P 500 in candlestick chart, and in gray, I have consumer sentiment. And what I want to do is take a walk down memory lane with what happens to the market when you have consumer sentiment going south, yet the S&P 500 continues up higher. And as you could see, as I just pointed out on another chart, we are cratering. No great shock. We've been here before. But the key is let's take a historical perspective. Let's walk down memory lane. How did it end? How did this divergence end? Let's watch. So back here, this is a quarterly chart. Again, consumer sentiment in gray, candlestick, the S&P 500. So we peaked out in Q1 1984. We continued putting in lower highs, lower lows. Here was Black Monday. I was alive. I was watching the market, wasn't trading the market that much, but man, was I fascinated. Next time we saw this type of a divergence was a peak back here in the April quarter, 1999. Fast forward, the dot-com bubble burst. Fast forward to the October quarter, 2004. Consumer confidence craters. Several quarters later, we have the financial crisis. Now to present day, consumer confidence peaked out in January, the Q1 of 2018. Look at us now. Now we know from past divergences that the stock market can continue up higher for great lengths of time. Back here was 12 quarters during the financial crisis, from peak to break in the market, from peak in consumer confidence back here in the 80s to the Black Monday event. That was 14 quarters. So it's a pretty consistent number. Now, the question is, how far are we extended beyond the peak of the January quarter of 2018? 14 quarters. We're in the 14th quarter of the bearish divergence of consumer confidence. Folks, buckle up. Buckle up. We have every red flag that can possibly be thought of is hitting this market. Inflation, yields wanting to jump up, but the Fed is manipulating the numbers. They're keeping it, they're manipulating the yield curve. You have gold, which I believe, and I won't be able to prove it tonight. Next Sunday night, I'll be able to prove it. Maybe I'll do it on Thursday when we go live, if the report's released. But what I pulled was this. And for those that were not here last Sunday night, we saw a flash crash on gold right here. And I've been saying that I believed that what we saw in light volume trade was the blowout of stop loss orders, forced liquidation of positions. And what that did is it provided an opportunity for hedge funds to go in and begin buying, cover their shorts, because now you have Basel III that's out. I'm not going to get into it. I've already gone into it with members. I'll rediscuss it again at some point in time when I could boil it down to bite-sized pieces. But look up Basel III, and you'll see that paper shorts, paper gold is less valuable to the banks nowadays for liquidity concerns than it used to be. So I'm not going to get into it. But last Sunday, we had a flash crash, and I couldn't prove my theory that it was a bear raid. It's what it was. It was a bear raid. You had whales out there. They hammered down smaller traders. So every week, there's something called the Cot Report, also known as the Commitment of Traders Report. And this covers the long-short positions of swap dealers. Those are your hedgers. Managed money. Those are obviously your hedge funds, your banks. Other reportables. Those are your central banks. And we saw a lot of change. Now, this report, it goes from Monday to Monday. So as of Monday's report, which of course includes whatever activity happened here, you saw a major increase in managed money short positions. They hammered short positions by 33,442 contracts, and they closed long positions by 21,028 contracts. So a lot of action in that reporting period by managed money. Now, I'm willing to bet that come this time next week when we have the new report out, that because this report ends on Monday the 9th. So it doesn't reflect the 10th, 11th, 12th, 13th. Because remember what happened last week. Gold, despite the flash crash, closed up on the week. Who was buying? Who has the power to move gold from being all the way down here, even lower in the futures market the night before? We tested 1675, and yet we closed positive. Who could do that? Well, I'll bet you these guys right here. So we'll check back in to validate. My guess is that you're going to see net long positions would have increased for next reporting period for the Cot Report. Short positions decreased, and you probably saw some central banks in there buying up as well. And there's a history of doing this. And maybe I'll cover that at another point in time. So that's my story on the flash crash. Okay, let's talk about our watch stocks for the new trading week. We're going to set up our alerts. EPI, we're going to begin with EPI. EPI would be a long, an investment long. Not a swing trade, but an investable long. Now, the first chart I'm pulling up here is the weekly chart. And what we saw last week was a continuation breakout. We had broken out the prior week. We pulled back to the retest, and we reversed. Bullish key reversal bar. We're going up higher here on India. Now, what do we want to know? Well, we already know that it's safe to go jumping in the water due to the fact that we have a retest of a breakout point. It held enough buyers to send it up higher. Volume a little bit light. But what we want to do is we want to identify with the automated trend lines where we have resistance. So that if at some point in time in the future we want to book profits, we can at a resistance level. And we can always look to get back in at lower prices. And we're going to keep this active for a long time. Let's reduce this a little bit. So our alert is set, daily chart. So the daily chart's telling us right now that I would not be going to buy the open tomorrow. I will watch to see how we trade tomorrow. Do we hold this breakout point? Or do we fade? So we'll be watching it. So I'll want to know when we get a retest and if we break through it. If it holds, we will be looking to buy EPI, the Wisdom Tree India Earnings Fund. So you can see here, our alerts are set, and we're good to go. Let's take a quick peek at seasonality. I don't know how much history we have here. There's not much in terms of history. It only goes back to 2018. So the next couple of months are nice, but we're not looking to swing trade this. We're looking for an investment in India. So longer term, we're going to be holding this for. So I'm not too concerned about seasonality. The next chart, or the next stock on our watch list, or an ETN, I should say, wheat. Beautiful breakout on a monthly time frame. Great week last week. We had broken out the week prior. Last week was a continuation breakout week. Let's see if we have any resistance above on a weekly or monthly time frame. We do not. Actually, we do. Let's memorialize. We broke out. We broke out above prior resistance. New all-time highs last week. Daily chart. So what I want to see here is a retest of this breakout point. And then that would be our buy signal. Cattle, yeah, I took a look at that chart, I think about a week and a half ago. It was really firming up nicely. We'll take a look at it. I think there's an ETN out there called MOO, M-O-O. And we'll keep this active for a couple of weeks. So we're good to go here. So on a pullback and a retest, we get an alert. If this, then that. I'm not going to chase it. We're going to wait for that retest. And we'll open a position on a retest of daily support. Moo. Yeah, this is... let's go to a monthly chart really quick. Yeah, this is going higher. This is looking beautiful. We broke out this month. Very, very nice chart. Last week, continuation breakout on volume. Folks, prices are going up. You know, we really got to start thinking about the realities of what is really going on. I mean, we have, I don't want to talk politics, but I'm talking about we have an administration that shut down the Keystone Pipeline, denied permits to drill here in the United States on government property. We are now energy dependent on the Middle East again. That does not end well. We've been here before. Prices are going up higher across the board. I can go on and on and on. This is just a horrible recipe for a capitalistic society. Horrible. So, daily chart, doji star formation. I think we're breaking out here. And should we break out and above, resistance at 93.99. I got to look and see if there's options on this. I'd be a buyer. Our alert is set. We're good to go. T. Over I just bit my tongue. 7% yielder, a little bit more. We'll come back to the daily chart. Monthly chart. I think what we're setting up for here, and it looks like I went over this, probably a chart request the other day. We have a nice W formation forming here. I have an alert set which did not fire off. Unless it's expired. Oh, it did fire off. It did fire off. I just wasn't paying attention. Let's see if we get another retest of support. And we're good. Weekly chart. Really, really nice. Really, really nice setup here. Rule number one, when you want to buy a stock that's been beaten up, it's got to stop going down. Has it stopped going down? Yep. This chart's looking rock solid. I'm not even sure whether or not I even want to wait for an alert to fire off. Again, these are not short-term swing trades. Wheat would be EPI, an investment. Wheat's a swing trade. T is an investment. And The next, let's go to the daily chart. Really nice. Really, really nice. We broke back down on Thursday, recaptured on Friday. We're going higher. This is a buy. And I'm loving the monthly chart. You got to love this W formation. We break out and above the highs of May, and that high being 33.88. We're going a lot higher. Next chart up, SMH, the semiconductor holders. This would be a short-term swing trade only. Monthly chart attempting to break out, rejected thus far. Weekly chart. Now I have a bit of a conflict here because my one chart showed that we held support. Here. Yet this chart is showing that we broke down. That doesn't make sense. We're going to see how it opens up. It's got to, using this chart system here, we're going to make our alerts. We've got to have a breakout. And we'll keep it active for 10 days. We're good to go. Daily chart. Yeah, we got to close above, let's call it 264.20. And that would make it worthy of our investment dollar. Take note of when the semis backed off, when they sold off. They hit, again, these are the automated trend lines. They hit those automated trend lines and sold off. You know, I'm not feeling good about the semis right now. The more I look at this, the more I may want to take it off the table. Jury's out on the semis. I'm not sure whether I'm going to follow through with this trade. We'll see how it opens up tomorrow. Watch bond yields. Bond yields go up higher. We're probably not going to make this trade. If they drop bond yields back down again, then if the price action works out well with the semis and or tech, we'll put the trade on. UBOT, this is going to be a long. This is the direct scene. This is a leveraged ETF, folks. Robotics and AI fund. And I'm loving this chart. Look at this multi-month consolidation. The longer the consolidation, the greater the validation of any breakout. And we have broken out. We haven't closed yet. Still half a month to go. Weekly chart. Now take note on a weekly time frame. It looks great, right? Until you put up your trend lines. The automated trend lines, the algorithm. Let the algorithm work for you. The institutional traders are letting them work for them, so you should let them work for you too. So take note that we have resistance above. So what's the entry here? All I care about is a breakout. There is another option. I'm going to use the upper band here. Now, what if we don't break through on the first go around? What do we do then? Well, we set up an alert down here where we broke out of. This should now act as support. That's the ideal entry point. And then if we hold it and we break out above resistance, then we add more. We want to build on strength. All right, the last chart we're going to go over as our watch for our watch list is Microsoft. I want to short Microsoft. For those that are new, haven't watched me before, it's not that I don't believe that Microsoft is a great company, great stock. I do. I respect it. But as I've shared with members in the past and on the live streams, yearly RSI 95.52, trading it up and into the third standard deviation Bollinger Band. Quarterly chart, RSI 95.63. Monthly chart, RSI 86.19. Very extended, long in the tooth. But guess what? It's probably going up higher. So if that's what I believe, then where do I want to set my sights on getting short? Well, the monthly chart still looks very, very strong. We're going to respect it. It's showing that there's resistance all the way up here at 427. I don't think we're going up that high. But when you go to the weekly chart, I'm going to take the automated trend lines off. This is a very bullish chart. I think we are going up higher. We may retest support, then continue up higher. But then, here's where it gets interesting. This is where you're using the technology to help you identify a great risk-reward entry point for your short position, just to nibble. Take a short position. And that's by putting up your automated trend line right here. And you can see at current, resistance is at around 303 per share, but it's rising. And we're going to keep this active for a while. And there we go. Note how volume is very, very light. Daily chart. Daily chart looking good. Here's our resistance level up above. Again, I do believe that it's moving up higher. Let's go to seasonality. This goes back to 1987. August. We're in a seasonally strong period of time. Oddly enough, October is one of the best months for Microsoft. Very strange, but okay. Let's go back and see how we look on a 13-year view. August strong, September weak, October very, very strong. So we really don't have an edge seasonality-wise. So no great rush here to go shorting Microsoft. All right, we have about 15 minutes left to go. Our alerts are set. We're good to go for the trading week. Okay, let's do some chart requests. I don't think I have anything to go over in the members area. Let me just confirm. Nope, I do not. All right, we'll take some requests from the audience. All right, so who do we have? We have Abel, I know, wanted Nari. Let's see what else we got here. Bob sounded like Ric Flair for a second. Airbnb. Good week last week. We own it. Patrick, welcome. We're going to go over a chart in Nvidia. That's probably going to be an earnings trade for us, Randy. mRNA, Moderna. They got some really good headlines today. Their vaccination, the study hasn't been peer reviewed yet, but their vaccination is like 75% effective versus Pfizer at 47%. WMT. Reporting earnings this week. All right, NGD. We'll leave it off with that. Okay. The request window, like the gold window, which was closed 50 years ago, is now closed. Abel. Thanks, Bob. Really grateful for your willingness to do technical analysis on the chart. You're welcome. You're very welcome. All right, Nari. We're going to kick it off with Nari. Yeah, I remember this one. It kind of did what I expected it to do. Brutal week. All right, so here's the good news for you. It looks as though it held this volume shelf. $71.49. Where do we close? About there. Rarely do you get a single long red candlestick. These normally come in threes. I'd be looking at $64 as support and an area to buy. You may get support down here at the lower end of this volume shelf at $67.50. But for all I know, you could pop up higher on Monday. You know, we don't know. But if you start putting it in on Monday morning, if it's going to happen, it's going to happen on Monday morning. You may get a rally early Monday morning. Do not chase that rally. It's a head fake rally. It's a sucker's rally. Don't do it. Wait till you see how it closes. It doesn't matter where stock trades, intra-period, daily chart, weekly chart, monthly chart. What matters is where it closes. Don't get suckered in. Wait to see how it closes. Does it hold 71.49? If it does for a couple of days, well then, maybe we've stopped going down. But if it breaks, you got to watch $67.50, then $64 per share. Daily chart. You have a lot of insider selling here. A lot of insider selling. A few of them look like they're on automated sales. Most of them look like they're on automated sales. But they're steadily selling. So just beware of that. On Friday, we closed exactly or just about where the lows were on August the 11th. If we break down to new weekly lows, you got to avoid. Wait for it to hit those support levels on a weekly time frame. Airbnb, we own this. Monthly view, inside bar, no new high, no new low. Weekly chart, flirting with a breakout at 153.02. Where do we close? 152.76. We're right there. We've had 4 sequential weeks of rising price action. Very, very strong. This is subject to a possible pullback because the probabilities, the longer this rally continues, the greater the probability of a quick pullback. So we're not blind to that. We may be long, but we're not going to talk our book. We'll leave that to CNBC and the talking heads they bring on. Daily chart. We're right at that resistance level. I would not be a buyer here. I would not look to add more. I would do so if we manage to break out. In our case, we will be adding. And our alert is set. We're good to go. So Airbnb, very bullish on. I think it'll do better as yields move up higher, if there's a perception that the economy is opening up. But they just changed. I read an article today about them. They changed their agreement that they're now liable for any sexual abuse cases that happen. I don't know. I don't know if it's going to have an impact on the stock. It's probably not. But just be aware that it's out there. You may just want to do a search of their press releases and make your own determination. Nvidia. All right. So we'll be looking to sell premium. When you sell premium, it means you're selling options. We're not buying options. We are the casino. We are not the gambler. And I think that we are breaking out. There's a very high probability that we will be trading Nvidia on earnings. Nice consolidation here. It bounced off the lower band of support last week. Couldn't close positive. Volume last week was very light to the downside. Really good to see. Daily chart. So you could see where I drew my resistance level above. You could see that there's an automated trend line right there. So what that tells me, I ain't lost it yet. Not yet anyway. But if we do get a breakout, we're going to have rising resistance here. So if I decided I wanted to buy the stock, then I would want to know when we hit resistance. So I'm just going to set up an alert just in case. And what I might do is when I'm trying to determine what, because a short strangle is you sell, let's call it one deep out of the money contract, call option, and simultaneously you sell a deep out of the money put contract and you generate cash flow. So ideally what I do here is I sell a call contract at or above this resistance level. That will increase my probabilities of success because I will have sellers of like mind looking to prevent Nvidia from moving up and beyond that level. Maybe it's just a day. That's all I need. A little bit of resistance and the implied volatility of that option gets crushed. And that's what we want. And what I would do as well at the same time is sell a deep out of the money put contract, and I'll create an alert down here just to remind me. Because if we get a pullback, these just may act as support. So if I sell a put contract beyond these support levels, again, that increases my probability of profit. We'll keep this active for 16 days is good. And we're good to go. So Nvidia looking good. bullish. We're in an uptrend channel. We're at the lower band of that rising uptrend channel. I think we're moving up higher. So we'll definitely be trading Nvidia. Folks, if I could ask you to smash that like button, I'd really appreciate it. Again, it helps me out with the YouTube algorithm. And as we navigate towards the end of this program, I got to bring up what's important. And that is our rights. God bless America. So let's not lose sight of that. Next chart up, mRNA. Just want to see what the insiders are doing. A lot of selling going on. We don't have much data to use seasonality, so I'm not going to talk about it. You don't want to use too thin a data for seasonality. You want to have 10 years or more of data. All right. Let's go to the monthly chart first. I want to get a feel for where it's been to identify where it may be going. Very extended here. That doesn't mean it can't move up higher, but we were considerably higher. We pierced the third standard deviation Bollinger Band, and when I see that happen, I always bring out the old phrase, it doesn't end well. So just beware that we are retracing off of a very overbought condition. Last week's price action was extremely bearish. Very, very bearish. You don't get more bearish than this. The only way you could have gotten more bearish is if we would have closed at the lows of the week and down below the prior week's lows. But you know what? This is enough. So I'm very skeptical moving into the new trading week. The trend is clearly still up. Don't get me wrong. It's still in a strong bull run. You can't ignore that. I may be a contrarian, but we respect the trend. Daily chart. So the one thing I want to point out, I don't want to be all doom and gloom here. Your down volume is dropping off or has dropped off dramatically. You've had 4 consecutive down days. It's due for an up day. Would I be a buyer here? I would wait. If we put in a new weekly low, I would avoid. We go 1 penny below last week's lows, I would avoid for at least a week. Come back and revisit it. But if we hold for a few days and you see a setup occur, then maybe you have a trade at hand. Sloppy manual line. Let's try that again. There we go. So if you're looking for a buy point here, I'm not even going to put an upper band. It's too tight. I would use 386 as a potential entry point, but it makes a new weekly low. I'd be out. I'd stop out real quick. All right, so I want to know if we break through as much as I want to know about a touch and a bounce. And we're going to set this up to fire off. We'll go 3 times. Keep it active for 15 days. Other than that, there's really not much to talk about with Moderna. It's really going to be, what does it do on Monday? If it's going to make a new stocks, if they're going to make a new weekly low, they're probably going to do it on a Monday morning. It's going to happen. Maybe you get a rally. It's probably going to be a head fake rally, and then you roll over. So just don't get lured in on some buying in the morning. Wait and see how it closes. That's what matters. WMT. WMT, Carter Worth put out a, Carter Worth, if you're not familiar, he's a technician, and he's very, very good. He goes on CNBC. That doesn't make him a bad guy. He's very good. I happen to like his work. And he did some analysis on Walmart, and he was bearish on Costco, bullish on Walmart. I can see why he's bullish on a monthly time frame on Walmart. I also believe he was bullish on Target as well. Validate me. I'm sure the video is still up on YouTube. Not on YouTube, on CNBC's videos. So you can see here, let's get rid of all these rays and stuff. I did not want to do that. Remove all rays. There we go. Okay. So you can see we broke out last week. Probably helped a little bit by Carter, which is actually a monthly chart. So we broke out on the month so far. So nice month thus far. Volume could be better. I mean, here's your moving average up here in blue. Yet we're all the way down here. Volume is not wonderful. We're halfway through the month. Weekly chart. Extended relative to the third standard deviation Bollinger Band. Be very, very careful here. There's a lot of speculative activity up here. Be careful. Volume rose week over week. Good stuff. You can see that we sold off the highs of the week. Why? We pierced that 3D Bollinger Band. Daily chart. And here's another reason why we backed off on the 11th. What do we do? The value of the automated trend lines. Take them off. If you didn't have them on, you may be saying, oh, it got extended relative to the Bollinger Band, and you wouldn't have realized, holy crap, we have resistance above. So what we want to do is we want to memorialize it. And we'll keep this active for 2 weeks, 14 days. That works. Let's check out seasonality. This goes back 13 years. August is not a good month. 50-50 month. I like better odds than 50-50. September is a very, very good month. Up 75% of the time. August is okay, nearly 60%. So we're entering a seasonally favorable period of time for Walmart. So Walmart looking very good. Just beware of the resistance above. If by chance we get a sell-off, you have support below down here at around 146.50. Another support level to watch is down here at 147 per share. AOSL. Alpha and Omega Semiconductor Limited. Apparently, I've gone over this one before. I don't like it. It's struggling. Struggling, trying to hold on to 25.37. It attempted to break out. It was rejected. There's your declining upper band of resistance. Weekly chart, we saw a big fade right off of that resistance level last week. Volume was good. They did manage to close it up, which is good. We're holding the 50-period moving average, which is rising. That's good. If I didn't say it, volume was good. I may have already said that. I think I think with this stock, if you like it, you can scratch the itch, take a small position. It looks as though uh, there's money flowing in here, as noted by the higher lows. If you get a sell-off by chance, watch 25.50 per share as an area to add more. But if you break that support level, you got to stop out. Or I would stop out. I can't tell you what to do. And if by chance we don't pull back, or if we do pull back and we manage to rally and take out this upper band of resistance, that would be pretty huge. We don't want any sensitivity. Let's get that off. All we care about is a close on a breakout above resistance, not an almost. And we're good to go. You're welcome. You're very welcome. All right, how much more time do we have? 7:07. I got to go over NGD, and we're over. I promise to do NGD. Sorry, folks, if you put a note in there. I can't do them all. If you remember, I'll stay up all night. New Gold Inc. Let's get rid of this. Is this a miner? I don't know this company. It's got a lot of trouble, though. Monthly chart is very bearish. We broke critical support. Weekly chart. Brutal. I wouldn't short it. I think you already missed the boat on the short. But I would not buy it. Daily chart. Yeah, this is probably going to go down into extreme oversold territory. Todd, it's a gold mining stock? Really? Any news? Earnings? I know a lot of the miners reported last week. Barrick reported they didn't do well. I wouldn't short it. I think that you're probably going to see RSI down below 20. This is a stock that's trading down below $5 per share. The strategy I have with stocks like these, assuming that they have no ongoing concern issues, we've got to take that off the board first. No ongoing concern issues. If that's not an issue, on a stock that's trading down below $5 per share, remember, a lot of funds out there can't buy stocks that are down below $5 per share. So you can easily see RSI down below 10. Easily. You may think 12 and it can't go down below 12. My God, it's an incredible opportunity. Trust me. I've been doing this a long time, trading extreme oversold stocks. It can go down below 10. That is when it becomes attractive, especially if you have historical support below, and you do. So let's talk about this as if it were an extreme oversold stock. What would I do? Well, I would wait for a single-digit RSI. And I would, of course, take a look at where I would have buyers of like mind down below. Now, if we go down below 10 on RSI, that means that we're going to be below $1 on share price. So I want to take a look at where there was support. And right here is just oozing of support. And that's at 79 cents per share. So beware. Be very careful. Yeah, it was in earnings. That makes sense. All right, all. Hey, man. Guys, if you haven't hit the like button, please smash the like button. If you like TrendSpider, 35% discount code below. Subscribe to the channel. You know the deal. Members who join up to the Contrarian Trader Silver and Gold level memberships get TrendSpider for free. So join up. And there's a link below for that as well. Folks, have a profitable trading week. Don't chase the market. Wait for your support levels to get hit or breakouts to occur. And have a profitable trading week. Be well. Thanks for joining in. I appreciate it.